And hi everybody, it's Tim Reazor with Revere Asset Management. Let's see here, just after 4 o'clock on a Wednesday night. So very quickly, stock market market lovers, before you and I begin, I've got a lot to cover. I don't want to bury the lead here, but I'm going to say, does the summer rally start now? You're like, summer rally, dude. We just got some CPI and PPI numbers. I want to build you a picture and show you what I'm looking at. I'm not, as you know, I'm normally castigated as a overly bearish bear. I'm not certainly bullish here either, but I'll show you maybe what the ebbs and flows are going to potentially look like here in a few minutes. So watch the video all the way to the end, please. But very quickly, I need to show you a calendar because I get a ton of questions, and you can ask me all the questions in the world right here. Well, let me show you 2 places. You can ask questions of anybody here at Revere Asset. So if you go to about strategy and you just scroll all the way down, you'll see the portfolios, the cores, the hybrids. You'll see everybody, America's fiduciary right here, Danny Stewart, Don Vanderboord and Hunter Mazingo. They run the portfolios. They put all the things on the watch list, all the things in the portfolios, the buys, the sells, everything. And what makes Hunter and Don so different and so unique than anybody else in the free world in China, especially at all those strip mall advisors next to the vape shops in America, is that they make themselves available to you. So if you ever have questions, like they'll do, like where we use meeting software, tape these videos, they'll do a Zoom with you. They'll absolutely walk the dog with you in their process, and everything we do here is transparent. And that sets us apart. And well, why would you give away what you're doing? Because if we're more inclusive, the more you will be able to follow along, or just as importantly, explain to your loved ones and your friends what we're doing, and that builds trust and transparency, builds trust, and it makes for a better relationship should you or maybe your loved ones ever become clients, because you'll see exactly what we're doing. And when you watch these videos like I'm talking about right now, it makes a tremendous amount more sense. And so anyway, you can email Danny. I'll tell you what, if you see this little phone button, if you're on a connected device right now and you hit that phone button, you're going to get Danny. I'm telling you, he's going to answer the phone, and he'll answer at odd hours too. You'll be like, it's 9 o'clock Central. What you doing, man? And Danny's like, hey, I'm working. And so he'll answer the phone for you. So I'm telling you, don't ever be afraid to reach out to us, or in fact, contact us. But look, or the other way to do it is you can get a hold of me on Twitter. And so I get a ton of people that will message me right here. Like we're texting buddies, it shows up here. And I like Twitter because it's brevity, and you get your question answered and you move on. And a lot of people, they enjoy the direct messaging feature of Twitter. And by the way, my DMs are open, so you don't have to follow me. If you don't want to follow me, all good to me. Just shoot me a message, and I'll do my best to, in fact, answer your question. Excuse me. And then what I wanted to show you, a lot of questions that I get are about upcoming reports. And so here, my friends, is my favorite economic calendar. It's the trading economics calendar. And if you're in the central time zone, this is set to, which I am, it's -5, right? And so if you're on the East Coast, that'd be -4, and so on through the different time zones. But it'll set it to your local time zone. That's what I'm trying to tell you. And so you'll get a look at all the reports that are coming out. And you can see today, right, at 7:30 Central, we had core inflation and CPI, big reports, right? Obviously, you know about this. By the way, the Bank of Canada had an interest rate decision this morning, and they raised 1%, 100 basis points, right? And there's like a 25% chance, we'll get into this here in a few minutes, there's like a 25% chance that the US, and it's a forecast now, it's not Jay Powell ain't saying what he's doing, goes 100 bips. And so super interesting, right? Like nobody talks about Canadian monetary policy, but today when they came out and raised a whole percentage point, that is a big deal. And so you can see yesterday markets faded back a little bit on a IBD tip number that came out at 9 a.m. And it's, by the way, the IBD tip poll, do I have that up? I think I do. It's right here. By the way, the polling service that Investors Business Daily uses, it's TIP. I'm telling you, they are one of the most accurate prognosticators in the country, if not the world. So I pay attention to these reports, and half of Americans think that we're in a recession. Look, you can say something tongue-in-cheek or a little snarky here, but the bottom line is that if Americans are pulling in their horns and we're 70% a spending economy, a service-based economy, that is a big deal. And if you can, if you will just Google IBD tipper poll, and this is like one of the first things that you'll see. And if you can't find it, just in fact, let me know. But back to this economic calendar. So tomorrow, there's always tomorrow for PPI, right? And so this is the Producers Price Index. This, my friends, is what businesses are doing. And which businesses can pass along the cost and which can. And so this is a very big deal. And then you'll see like at 10 a.m., there's a Fed speaker, right? And so this is why this is one of my favorite calendars, because you get the Fed speakers in here as well. And that is a big deal. Are they going to come out tomorrow and support what? 100 basis points? Are they going to come out and support 100 basis points? Or is Waller going to come out tomorrow and say, hey, we think 75, which is code for the market, right? And so the Fed only speaks in code, and you need to realize that, like, here's a Bostic speech. And is Bostic on Friday morning, notice it's before the market open, market opens at 8:30 Central. Bostic's going to come out and speak, and is he going to say 100 basis points or 75 bips? And so again, code. So they're speaking to the markets in code before the July meeting. And I you know, say what you will about the Fed, pay attention to them or dismiss them at your peril. And so tomorrow is a super interesting day. And then Friday, you can see there's right here, retail sales, import export prices, and all that other good stuff. But CPI wins the day, PPI wins the day tomorrow. But, and before I go on any further, you know what these videos are for, stock news, market lovers. These are for what? Your edification purposes only. They're never to be misconstrued as advice. One advice, advice. All you have to do for any kind of advice that you might want, just call or email. We're never going to spam you. We don't have a sales cycle. I know people still scoff at it. You don't have a sales cycle. No. Why would we want to do that? Why would we want to ruin our relationship with you? All of our business is word of mouth, and it's you at home telling people about us. It's a beautiful relationship that we have with you, and it's something that's so precious and takes so long to build that fools would rush in to try to destroy that with a sales process. So with that, let's get started on the journey. So I could show you the chart of the S&P and go, inflation, it's bad, you know, like all the other people that seem to do videos on the internet, but I'd like to give you something more for your time, right? And by the way, I'm going to show you a screen of stocks at the end of this video that is shocking. And so we'll get into that here in a moment, but I've shown you this before, right? RBOB, gasoline futures, just, you know, I mean, this is a bearish chart, right? Correction chart, down more than 20%, right? And so bearish territory. And we talked about this weeks ago that has inflation peaked. And you're like, well, those numbers were really bad. But remember, the numbers that came out today were backwards looking. That arrow was pointing backwards. Backwards looking is June, right? And so has inflation peaked now? You know, obviously I don't know. But look at this chart of RBOB. Look at this chart of crude. And by the way, we talked about crude a couple of weeks ago, you and I, falling down to the 200-day. There it is, right? Like, I think it was up here somewhere a couple of weeks ago. And it's going to come down to the zone, you know, somewhere between 89 and I think 200 is like 93, yeah. And so, and there it is. And so, well, does it bounce higher from here? I don't know. Is it something you want to invest in? Is it something you want to bet the farm on? No, not necessarily. But look, RBOB, crude falling. How about natural gas, which rallied today? NG, right? Natural gas gets a lot of play in Europe. There's a lot of play here too, by the way. But look at this NG peaking up here above 9, and then falling right now. Currently, what? 650, We'll just call it 660. How about lumber? Let's look at lumber. This is just random length lumber falling off a cliff. Okay. You know, I do lean honks for Mark and Buffalo, but I'm going to mix it up on the thing. I'm going to go soybeans. He probably knew I was going to go soybeans. So we'll go XK. Soy futures. Look at soy futures, right? And so if the inputs are coming down, right, but the market's still not, oh, Tim, the market, you always say the market's a forward-looking vehicle. And what is the market? I mean, look at this SPX chart. This is just, man, we are not going anywhere. I mean, we're getting rejected over here at the 5 and the 8. You know, we can't really clear the 21. 34 is in the way there. That's the blue line. What are we doing here? If you're telling me that inflation is peaking, shouldn't the market be better than this? And well, what you're fighting right now is the Fed. And you're like, well, the Fed's tightening, but let me show you something that's kind of going to puzzle, maybe give you a little bewilderment. Interest rates fell today, right? And they've been falling. And so interest rates, you know, like, well, there was a little rally there. Look, the trend on TNX since the middle of June, you're up at 3 point. How you read this chart, by the way? So you see how it says 3 point over here on my right hand side, 3.34.83. It's really 3.48, and now you have a number in the twos. Okay, it's a big deal. And so interest rates are falling. That's good. Did you see the number last week where it was the most mortgage applications in 1 week, like a 1 week jump from 2000, like all the way back to 2008, the biggest 1 week jump because mortgage rates fell? And you're like, well, if mortgage rates are falling and the inputs are potential, well, RBOB's falling. You saw the chart, right? I'm not making it up. Not all the inputs are falling, but a lot of the inputs are falling into our lives. If these things are falling, then what in God's green earth is going on here that the market cannot get out of its own way? It's the Fed and the tightening that's still yet to come, and it's the dollar. And so let's look at the dollar. By the way, ignore the dollar at your own peril, okay? Because this dollar is going to wreck a bunch of things. And we'll take a look, and I'll just prove it to you how the dollar is wrecking a bunch of things. The Dixie is at a 20-year high. This is a big deal, right? This is a big mother hunking deal. So it crushes exporters, right? This high dollar does a ton of things to a bunch of people, and as long as the dollar is staying high, bouncing on pullbacks, just coming up, bouncing and going back higher, this market will never be able to get out of its way. And as long as the Fed is taking money out of the system, so you can track the M2 money supply. So as long as the Fed is taking money out of the system and tightening, that is two ways they're tightening. That's new, right? So let's go to TIGH. So they're taking money out of the system and they're tightening. This is the most aggressive Fed in the history of a Fed that we've had here, even Volcker in the 80s. Well, you don't want to fight that. And it's why this dollar is so powerful. And so let's look at this here. Let's look at what the dollar and the S&P relationship is like, just real quickly. So here is 512, 516, 512, 516. But it's probably easier. By the way, I think you ignore an ATR chart at your own peril too. So let's look here. Here's the Dixie. I'm just going to go all the way back. So here's the Dixie, 512. Show you what I'm looking at. 512, 513 of this year, and the dollar comes off. So in that time frame till say 527. So 512 to 527. What was the S&P doing? So here's the S&P 500, 512 to 527. So here's 511. Here's 512. Goes up, pulls back a little bit, and what happens? And it starts bouncing all the way up to 527, where the S&P plateaus and then goes lower again. What do you think happened on, say, 6/9? Do you think the dollar went higher or lower? And I don't know. So we're going to do it together. We're going to find out together, friends. And so let's look at there's 6/9, right? The dollar's plateauing. It looks like the S&P, and then it reasserts itself, and you saw the S&Ps go lower. You can do that throughout the whole year here. That's the relationship, right? And it's the reason why metals like silver are getting crushed. Like you're finding a lot of people are frustrated. Metals aren't hedging. The metals are not hedging inflation. They're they're staving off negative interest rates, right? Because the metals themselves are a function of the dollar. I mean, look at this chart of how many commercials on the news can you watch about silver? And like silver is used in everything, but yet there's just all this silver, like just laying around that nobody wants apparently, because the price is being crushed by what? The dollar. And so this market's not going to be able to get out of its way. And so which leads me to a really interesting discussion that I had with a stock nerd the other day. And we were talking, and I said to this person, we're just talking, and I don't know, it was something that they said or I said, but hey, do the fundamentals matter in a corrective bearish environment? And the short answer is no, because everything gets crushed, right? It's when we come out of this environment, which you need a trigger, right? And I've talked extensively about a 5-8 trigger, something on a daily or a weekly chart, not a short-term chart, but a daily or a weekly chart that gives you something. And then once we come out of it, we're not in correction anymore or the bearish territory. Then those fundamentals, the stocks with the strongest backbone, which is the fundamentals, then they tend to go higher and further than the ones that are just, like a show like look at GME. Does GME have strong fundamentals? No. It's had a 4-for-1 split this week, and it just, 4-for-1 split announcement, and now it's pulling back, and then it's getting ready to split, and just keeps going up 3% today. Yeah, these are sugar high type stocks, not right now strongest fundamentals, but you're like a stock like NVIDIA, just can't get out of its own way right now. Clearly in a bunch of products that people want, use, and need, and yet can't get out of its way. And you're like, well, what about Apple, right? And so Apple, I mean, doesn't look as bad as per se NVIDIA, high of 182. Now it's trading like what's called 145.50. But this isn't so bad here. Support at the 21. So perhaps there's hope, right? And so it's really hard to say that a summer rally starts, now. We'll see what that number is tomorrow. By the way, we're doing the podcast early. Podcast is going to be shot early tomorrow. And so it'll be out Thursday afternoon, I believe. And so if you want to find it, subscribe, please, right here. And you'll get, we don't spam you with any kind of messaging. Just you get 5 videos a week and a podcast on typically Saturday. You'll get it early tomorrow, though, or Friday. And then you just come here, tomorrow's insights. And then you go to podcast, and all the podcasts are right there. For some reason, you are still hesitant and do not want to subscribe. So anyway, back to the show. So Apple, so finding support at 21. I find that to be interesting and slightly bullish for this market environment, but it's this. I talked about the dollar. So look at the dollar here. And I don't know if you noticed this earlier on the chart. It's at the 3rd ATR. And when it gets up in the zone of the 3rd ATR, sometimes it trends sideways. That gives the market some relief. But sometimes in that zone of the 3rd ATR, if you followed any of my ATR work over the years, the 3rd ATR is it's ripe for a pullback. And if the dollar is going to pull back, like I demonstrated to you earlier, if the dollar is going to pull back, like I demonstrated to you earlier, if the dollar is going to pull back, like I demonstrated to you earlier, perhaps for a few days, maybe a week or so, the markets can find their footing. And I find it interesting that the markets should have gotten shellacked, like a capital sh and a capital lacked today. And they did at first. But then, I mean, look, you're like, well, they're still down, TM. Yeah, I get it, but they were off the lows. And they could have easily closed them on the lows, especially with the PPI number coming out tomorrow. So if you can get a couple more bigger names like an Apple to find support through 20, what's Tesla doing? Tesla here kind of rejected today. It looks like it got rejected today at the 21, at the mean. You're like, what are you looking at, Tim? Well, so here, this is the mean, which is the 21 exponential moving. I see Tesla travels every day on average over the last 21 days about $42.75. And so today, plus $1, so really no big deal here. They didn't exceed its ATR to the upside, but closing like right at its mean. And so they got +1 ATR, 2 and 3, and then -1, -2, and -3 as you get ready for this earnings number here. If you can find a couple more big weighted stocks like an Apple and a Tesla that find support their 21 and maybe progress to their +1 ATR, and you can get the dollar, the Dixie here, to pull back to its mean, which is, by the way, bullish still for the dollar. And if it would reassert that, of course, would be bearish for the markets, as I've demonstrated. Yeah, then maybe the markets can find their footing here for a bit. And so, like, well, what's been leading? Leading is such a dangerous word in this market, right? But let's take a look here. You know, we'll keep it on ATR charts. So I've been looking at DLTR, right? Here's Dollar Tree, Dollar General, and how about OL? Like, do you want to? So based on ATR work, right? Just look as you know. Here's 2 ATR. You're kind of wisping in the zone of the 3 ATR, and then you pull back. You wisp in the zone of 3 ATR, pull back slightly. Kind of get there, a little gentle pullback. Kind of get there, pull back. Kind of get there, but here's the mean. You're not even getting back to the mean, right? So you don't want to chase. By the way, not advice. Remember, these videos are for edification purposes. Don't misconstrue that. And so, but if the market finds its footing, is it the ollies that are going to run, the Dollar Trees, Dollar Generals, or perhaps maybe it could be Apple's time to shine? And so I don't know. I just know that you probably, like, let's look at a P&G here. You probably don't want to chase those kind of things. And you can use the ATR charts as your guide, I believe, in that regard. Now, the thing I really want to show you, because super duper interesting to me, let me go to FinViz. And so I like to show you things that are free, okay? And so FinViz, I don't even have the like premium FinViz. I just kept it this way for you for years, because even though it's a torrent of ads, okay? And so here, let's go to Screener. And I've got some preset screens, okay? And I want to show you something that's super interesting to me. These are all different variations on the theme of growth, okay? And so here's, I called it Div Grow 2000, okay? And so you can see I'm looking for growthy type stocks over 2%. And so you feel free to copy this, all for you. And so you can see the criteria I'm screening for. And some of these charts, you know, like energy, of course, is down. Energy, of course, is down. But look at, there's AbbVie, it's not so bad. But there's a couple in here that might, ConAgra, there's Consolidated. There's a couple in here that might be worth your time. And you can just hover over these charts like Flow. Flower Foods, I believe, is Hostess, Wonder Bread. Here's Kellogg, and you can go through and look at some of these. But what I found, and by the way, if you're like, well, how do I get this screen? I don't know if I can send it to you, meaning I don't know if I can from FinViz send it to you, but you just pause the video, open up the FinViz tab, and you can just start choosing this. But look at this growth screen with 300K advancing volume. And so this is super interesting to me. There's no stocks. Growth screen 2, different variations on a theme. There's no stocks down here. This isn't an error. Just general, just a little bit looser. Yeah, once you loosen up, like this is like my level, like this is, I mean, Paycom, and another energy like Halo. That's not so shoot. Boot Barn, like, you know, this is not the one my favorite other screens I've created, and I've gone back to it, time immemorial, is this one. And there's no stocks in it, and it's a little tight, right? And so the looser the criteria, the more stocks you'll let in. That's telling you something right now, right? Because I started off this discussion about fundamentals. And then, but what I'm doing with this screen, you'll notice, is blending fundamentals with what? Technicals. And they're not meeting the criteria to which I have selected. And that's a problem. And so, well, that's going to remain a problem, okay, for a little bit of time. The market can turn, and you're not going to be ready for it. Because just like Jay Powell's numbers, like at the start of the video, they're lagging. Those were June's CPI. Tomorrow is June's PPI. What's happening right now? Right now, I showed you RBOB's falling, crude is falling, the commodity prices are falling, and they have been, and that is a good sign. especially if you're a consumer, where we have, that's a tax on getting anywhere, right? Whether you take mass transportation or you drive. And so you won't know the market is turned unless you have some kind of trigger. And FOMO, the fear of missing out, is fueled by you not knowing. FOMO tiers are filled with anxiety and nail biting because you fear you're going to miss the move, and the whole industry is designed to make you fearful. And the whole approach at Revere is to give you the confidence in what we do and what and you assessing the market, so you can absolutely have great conversations and based on fact and not fiction or hearsay, or have to rely on, heaven forbid, TV punditry. And so let's look here. So here is a weekly chart. That's a monthly chart, pardon me. I'm gonna get a weekly chart of the S&P 500. And so how will you know the market's turned? Because they don't ring a bell at the bottom. They sure as hell don't ring a bell at the top, okay? And so you have to be comfortable, one, with just capturing the filet mignon of a move, meaning the heart of it, letting the gristle on the ends go. And number two, you need a trigger. And so on my charts, this purple line is a 5 exponential moving average, and the green dotted line is an 8. There's a couple of approaches you can take to get yourself a trigger. And so if you're hesitant, you find yourself gun shy, or you're like, this is feeling like deja vu from 08, and then March of 09 comes around and you miss the move in March of 09, right? And only to see the markets go up without you. May I offer you this? When this purple line, this 5 exponential moving average, clears the 8 on a weekly, or if you're a little more conservative, you could wait for the 5 to cross the pink line, which is the 21. That's your entree. And I want you to point out that from the bottom, 1, 2, 3, 4, 5, 6, about 7 weeks for the 5 exponential, 8 exponential moving average cross, 7, 8, 9, 10, about 10 weeks. 10 weeks. So I mean, think about that in terms of the markets, right? Like you're hanging on with bated breath, and here it took 7 weeks, right? For you, you're like, let the market figure it out, right? Turn the TV off during this time. Everyone's guessing in here. Everyone was guessing in here. Everyone was guessing in here. But now you've got something to hang your hat on, a 5-8 cross. And if the 5-8 on a weekly time frame were to close below, if the 5 were to close back below the 8 on a weekly time frame, you exit. But if it keeps staying above, if it keeps staying above, you stay in. If you use the 21, you're a little more conservative. You look at that 521 cross. Where does the purple line cross the 21 again? All the way up here. By the way, interesting. That's where trouble with a capital T started. And so with that, my friends, I really hope it helps. And I hope it gives you a sense of calm and maybe hopefully what you're looking for to bring a little sanity and formulate a battle plan into the second half of the year. So with that, I certainly hope it helps. You know I love you, stock nerds. I'm always here for you. So hit me up at TJ Reazor, or just reach me at revereasset.com. So with that, hope you have a great night, and I will see you at the next update, which is absolutely the podcast.